Hello, good morning, ladies and gentlemen. Welcome to another session. I greet you all. Good morning. Unfortunately, I cannot connect to the comment section as I've been trying to do that since morning, but I think due to some technical issues, so I wouldn't be able to get some feedback from you at this particular point in time. But I would hope that things are quite okay as I have all the technical parameters set very well here from our own side, and I hope that things are actually doing well or from your own phone. And if you're finding it very difficult to probably connect to um, my screen, I will suggest that you um, restart your app so that you can be part of the session. So I'm so excited to welcome you once again to another promising session on the X-Trend Speed. My name is Sharif Daramola, and for the next 1 hour, I shall be your host, where we shall be evaluating the financial market using technical parameters to identify trading opportunities lining up for us today. Well, it's our culture here. The first thing we normally do is to go ahead and review all the pairs we have been monitoring since the beginning of the week. So we have four pairs we are going to be looking at, and we are going to be looking at how well they are doing, and at the same time see if we do have any trading opportunities lining up for us on these pairs today. And for those who are joining us for the first time, you're welcome on board. I appreciate your time. Thank you for being around, and I hope that as time goes by, you get to understand how this works, and you will be capable and able to independently make your decision by using the information that you will be gathering from this point. So once again, you're welcome everyone, and this is going to be the first time you will be seeing me live analyzing with you guys. So I might be a little bit nervous, but it's okay. I will find my way through as this goes by. So with that being said, here we shall be diving right into the market to see what is really going on in the market right now. Well, but before we go into the chart, as usual, we want to be seeing the economic calendar, as we have a macroeconomic event just concluded a couple of minutes ago, and that is the S&P global publication for the CIPS services, and that is affecting the GBP. And the data we have here is quite impressive as it blew all expectation. So we had a consensus of 48.3 as against the 48.7 for last month, but what we have right now is 53.3. That's a whopping positive variance of 4.44 figure at this particular point in time, and definitely we should be seeing some reflection of this a massive feedback on the chart as a bullish momentum for the pounds, and it appears we're beginning to see something like that in the pairs we have been monitoring so far. Remember, we have the GBP USD and the GBPJPY as one of the pairs we are monitoring for this week. So I will be diving into the chart right now, and the first pair we are going to be looking at this morning is the US oil. On the US oil, we have a situation here where price has been quite choppy. As you can see here, this is the 1 hour time frame, and remember that at the beginning of the week we had the situation running where price action was caught within a channel between the $77.90 level and the 76.35 area. So we had the resistance point of the channel here, and we had a support level of this channel at this point. And you know, from a technical standpoint, whenever we do have this kind of simple setup like this, all we need to be doing is to remain patient and wait out for that breakout or breakdown of that level to happen. So in order to position ourselves in such a way that we can catch this opportunity, we did have a buy stop right above the $77.90 level. So we saw the breakout of that structure prior to the live session yesterday, and during the live session yesterday I told you that if price do come back do a retest of that level, definitely we want to be joining a rally to the upside. And this is exactly what happened, and we saw a situation where price tested the structure and we saw price action move over 66 pips in our favor before we saw this impulsive bearish momentum that took us out of that structure, taking us out of all the position. And I hope you moved your stop loss to secure the current buy position when price action moved in our favor. And if you had done that, you will probably be taken out with some small profit, or the worst case scenario closed out at break even. And remember, I told you yesterday that we shall be using this bullish trend line as a yardstick for trading activity, as we want to continue to see price action trade above this trend line and above the $77.40 level to think of adding more position and be comfortable in the current buy position that we are in. And what we saw yesterday was quite interesting. Price action broke down that bullish trend line, giving us a little sign that we might likely see a situation where the bullish trend line may no longer have the capacity to continue to hold bullish momentum. So we saw the breakdown of that level to the downside here. And on my public platform this morning, I stated that we still want to be thinking of buying the US oil as long as price remain above the $77.90 level. And why have I made such a decision on the US oil? Well, if we look at the current structure we are in right now, and taking into consideration the flat channel we identified at the beginning of the week, you would realize that price action had been caught within this channel. And we had the support level of the channel here at the $76.35 level, and since the beginning of the week we have been seeing rejection of that structures by the buyers. And what this simply tells us is that every attempt by the sellers to continue to break down that structure has been met with strong resistance from the buyers. So at this point, we want to be considering the $76.35 level as a major determinant of buy pressure in this current market. So unless price action breaks down, retests the structure, we would not be thinking of selling the US oil at this point. And if you had your buy position triggered above the $77.90 level this morning, you will currently be running with about 40 pips in profit. So let's see how price action will be playing out from this current structure here as we continue to think of bullish momentum on this market. Now we have a structure at the $77.40 level, which has been a strong selling nation the past year. And look at what happened around the structure in the last 24 hours. We have been seeing selling pressure from that same level. So one thing we are going to be looking forward to during the New York session today is to see a significant breakout of this level. So what I'll be advising us to do is, as soon as price tests the structure, we want to be moving our stop loss accordingly to secure the current buy position as we wait out and see how price action will be reacting to the $77.40 level to decide if we are going to be adding more position to our existing buy trade here, or we might likely be thinking of selling at this point. But for me, based on the fact that we have been witnessing buy pressure within the $77.90 level and the $76.35 area, I am of the opinion that we will not be selling here unless price action breaks down this level. So I will be looking forward to price to adding more position to this buy trade. So as soon as price gets into the structure, scale down to your lower time frame. It could be your 5 minutes, your 10 minutes, or your 15 minutes time frame. Look out for breakout retest of structure within that area. Then you could be thinking of adding more position to our existing trade. Now, if price continues to the upside here, remember we also have another structure around the $78 level. Remember how important the $78 level has been in the past. And in order to have a better perspective into the importance of the $78 level, I would have no choice than to scale up into the daily time frame, or probably the 4 hours time frame, so that we can see how that level is important and how we want to be using the structure to guide our trading activity for today. So in that regard, I will be scaling into the 4 hours time frame, And on the 4 hours time frame, this is what you will see on your chart. Now, though price action has been bearish, and if I zoom out a little further, there is this thing we observed during the live session yesterday where we saw that price action had been very choppy, that is caught within a consolidation phase since the breakdown of the $82.50 level, which happened during the mid-month of November. And since the breakdown of this level had happened, price had continued to trade below that structure. First of all, to emphasize that sellers are strong here, as the $82.50 level continued to be a strong resistance for this channel. Then we also had the support level of the channel sitting around the $73 area. As we can see here, every attempt by the sellers to break down that structure has been met with strong resistance from the buyers, hereby giving us a beautiful flat channel to trade within. So we have a huge channel here between so we have about a 900 pips channel at this particular point in time in the last 3 to 4 months. Now if we look at the last time price tested the demand zone here, which is at the $73 level, and this actually happened during the course of last week's trading session, and you remember that we took advantage of this opportunity as we rode the move all the way into the $80 level. And remember also how important we said the $80 level is on our daily time frame. The $80 level has been a very strong selling niche in this particular market in the last 4 months. And what we saw here is that as soon as price tested the $80 level here, we have been seeing selling pressure around this area to further emphasize the strength of the sellers at this point. And one thing I made emphasis on here is that as soon as price tested the $80 level, what we saw here was a consolidation phase which appeared to have transitioned into a reversal pattern. And you know, from a technical standpoint, whenever we identify a reversal pattern like this, the next thing we want to be doing is to identify the neckline of that reversal pattern, which will definitely be our yardstick for trading activity. And lucky enough for us, and coincidentally, we had the neckline area situated at the $78 level, a major determinant of price action also in the past. And during the later part of last week's trading session, we saw the breakdown of the $78 level to give us a bearish signal at that point. And we were lucky enough to be part of that sell position as we rode the move all the way down into the $76 area. So now talking about how important the $78 level is on the 1 hour time frame, I told you I wanted to show you how important the structure is. And the importance of the structure here recently lies in the fact that it has been serving as a very strong demand zone in the past, and at the same time it falls within the neckline of that reversal pattern that we identified earlier. And from a technical standpoint, whenever we have a breakdown of a structure like this, there is a tendency that price action may likely come back, do a retest of that structure to incite another wave of bearish momentum. And that is what we are seeing right now. Price appears to be approaching the $78 level, and remember, we already have a buy position triggered as soon as price broke out of the $77.90 level. So now price action is continuing to the upside, and I told you that if price action gets into the $78 level, we'll definitely want to be moving our stop loss accordingly, lock in some profit, secure the current position as we wait out and see how price action will be reacting to the $78 level to decide what our next line of action will be. So if it so happens that price action gets into this level, move your stop loss accordingly, secure the current buy position, wait out to see how price action will be reacting to the structure. And what do we want to be looking forward to as soon as price gets into this level? Well, one of the situations we are going to be looking forward to is if we sight a breakout of the $78 level followed by buying pressure on our lower time frame, we definitely want to be thinking of adding more position to our existing trade. However, if price action gets into the structure and a selling pressure resumes here, that is, price action continue to reject that level with selling pressure, if possible, evolve into a reversal pattern in the form of a double top structure, then definitely we want to be thinking of selling at this particular point in time, and a breakdown retest of structure should further emphasize the strength of the sellers at this particular point in time. So these are the things we shall be looking forward to right now. So we already have a buy position running after price action broke out of the $77.90 level, and I told you how this current market structure has a possibility of giving us multiple entries, as we have structures like the $77.40 level, and we have structures like the $78 level to look out for another opportunity to add more position to our existing trade. And one more thing I would like to lay emphasis on here, looking at the current structure we have here on the daily, on the 4 hours time frame, things are looking a little bit bullish at this point in time. If we negate or take out this reversal pattern we saw here, and following this impulsive move that happened during the later part of last week, we saw that price action might likely come here to do a retest of structure to incite another wave of bullish momentum. And if we look at what has been happening here since the beginning of this week, you can see how this level around the $77.90 area and the $76 area has been a strong buying niche in this market. But we need something like a significant breakout of the $77.40 level for a beautiful and strong confirmation that buyers are going to be very strong during this week. So let's wait out and see how price action will react to the structure as we continue to monitor price action. And one thing also I would like to say here, since the test of the $76 level here, we can see we have a higher low. Price has been unable to break the previous low at this point, and that is also a beautiful signal that buyers are very strong at this current point. So we are not going to be thinking of selling the US oil unless a breakdown of the $76.35 level happens at any point in time. So selling the US oil will only happen if we see a breakdown of the $76.35. So these are my views here on the US oil for today. I hope I was able to make myself clear here, and you can also munch my screen so that you can use it as a reference point when you're about to make your individual decision during the New York session today. It's unfortunate that I cannot monitor the comments to see if there are any questions for me, as I cannot log into the comment box at this point in time. So I'm so sorry about that. So I hope that things go on as expected here. So that is that on the US oil here. So the next option we are going to be looking at this morning is the US tech. So on the US tech here, we shall be zooming into the 1 hour time frame, which is where we made our decision for yesterday. And this is what we had here at the beginning of the week. So I would like to zoom in so that we can see things more clearly here. Okay, so we have the situation here running, and this is what we identified at the beginning of the week. We saw our price action was caught within a channel between the 12,370 level here, which is serving as the resistance point of that channel, and we had a support level of the channel sitting around the $12,320 level. And in fact, in the last 24 hours here, as you can see, price has been choppy, consolidating between this channel to further emphasize the indecision in this market. But one thing I would like to state here is that due to the public holiday we had yesterday in the US, that is the president's holiday, you know, this stock market and the bond market was closed in observation of this holiday, and definitely as a result of this, you would agree that there will be not much liquidity in this market. So that is why we have been seeing the situation that we have here. And you know, from a technical standpoint, whenever we have a flat channel like this, what we want to be looking out for is either a breakout of the channel or a breakdown of that channel for trading opportunity. And what did we see here? Price action triggered our sell stop order right around the 12,320 level, and price action moved significantly well in our favor, hitting the TP target at the 12,200 level with 120 pips in profit. And for those who had been part of this trade, that is, if you are taking advantage of the sell position right below the 12,320 level, kudos to you, congratulations to you for being on standby to catch that move. And at this point in time, since we already have a TP target here, and what we have seen here in the last hour is that price action has been a little bit bullish at this point. As you can see, we have been witnessing buy pressure around the 12,200 level. So what we want to be doing right now is to scale up into the daily time frame. Let's see what is really going on around the 12,200 level and how important is this structure if we look at this market structure from an holistic point of view. Now, if we scale up a little bit into the 4 hours time frame, can we go into the daily time frame first of all, for the sake of those who are not part of the live session yesterday, so that you can have a better perspective into what we are talking about here. Now, I would scale up into the daily time frame, and let's quickly look at what we saw here at the beginning of the week. And this is what we identified here. So on the US tech, it is very obvious that price action has been bearish, and in fact throughout the course of last year's trading session, we saw a situation where price has been finding lower lows and lower highs. And if we connect the series of lower lows and lower highs, we have a beautiful linear bearish trend line to emphasize the strength of the sellers at this point. But things got a little bit interesting in the month of June, as we saw how buyers gathered around the $11,000 area to negate all attempt by the sellers to break down that structure. And this buy pressure around this area continued for the whole of the second half of last year, until we finally saw the breakout of the bearish trend line here during the third week of the month of January last month. And at this point, as soon as price broke out of that bearish trend line, it was a beautiful signal that the trend line no longer have the capacity to continue to hold bearish momentum. And what we saw here was interesting. Price action continued to find higher highs until it hit the 12,900 level, where we begin to see selling pressure resume around that area. Sellers continue to negate all attempt by the buyers to break out of that structure. And if we take a further dissection into the importance of the 12,900 by zooming out into the last 10 months on this chart, you will see how the 12,900 level had been a major determinant of price action. Looking at what happened here in the month of February stroke the month of March of last year, we saw the 12,900 level serving as a strong buying niche in this market. Though we saw some attempt by the buyers later in the month of April, but it wasn't strong enough, as we saw how sellers took out the buy positions here, breaking down the 12,900 level in the month of May. And since then, we saw a retest of structure to further emphasize the strength of the sellers around this 12,900 zone. Though we had a little breakout of the structure here within the month of July and the month of August, price action quickly came back below the level to further emphasize the strength of the sellers. And since the month of August, price has been trading below the 12,900, which is a good sign that sellers are very strong at that point. Now, at the beginning of the year, I will just zoom into the current structure to see what has been happening since the beginning of this year. So since the beginning of this year, we have seen a situation where price has been bullish, and lucky enough for us in this community, we were part of this bullish momentum as we rode the move all the way from above the 11,000 level to the 12,900 area with a whopping 8,800 pips. And in order to emphasize the importance of this bullish momentum, we can see we have higher lows. And when we connect the series of higher lows here, what you can see on your chart is a beautiful bullish trend line to emphasize the strength of the buyers since the beginning of this year. Now, something interesting happened last week as we saw the breakdown of that bullish trend line, which is the first time price action will ever break down that trend line since the beginning of the year. And that tells us something, that there is a likelihood that sellers might likely come in from this point. And if we look at the structure here since the beginning of this year, you would realize or agree with me that a retracement phase at this point is long overdue, as those who are taking advantage of this bullish momentum at the beginning of the year will at one point want to be taking some profit, and profit taking activities will be reflected on the chart in the form of a retracement of that previous impulse leg. And we might likely see a retracement go into the 11,700, or probably a retest of that bearish trend line that was broken on the 28th of January to incite another wave of bullish momentum. And one thing we identified during the live session yesterday is the fact that the multiple rejection of the 12,900 by the sellers appears to be transitioning into a possible reversal pattern here, which looks more like a double top structure. And this is what we saw here. We saw the first touch of the 12,900. Price action dropped into the 12,310. We saw another high. Price was unable to break the previous highs, hereby giving us a lower high, and price action came back into that structure. And what you can see here looks more like a reversal pattern in the form of a double top structure. And you know, from a technical standpoint, whenever we identify a reversal pattern like this, the next thing we want to be doing is to identify a neckline, which we shall definitely be using to guide trading activity. And so we had a neckline situated at the 12,310 level during the live session yesterday, where we said a breakdown of that structure will be a beautiful sign that this reversal pattern here is now matured. So we want to be seeing a breakdown something like this, selling pressure below the structure to incite that retracement phase to the downside. And one thing we can see here in the last 24 hours here is the fact that price appears to be trading right around the 12,310 level, and in fact we have been witnessing some selling pressure, and we were lucky enough to be part of that trade as we scooped about 120 pips as price action hit our TP target at the 12,200 level. So at this point in time, we are at a critical point in the market right now, as we need to see how price action will be reacting to the structure today to decide what our next line of action will be. And in order to have a better perspective into how price action is currently reacting to the 12,310 level, we want to be scaling down to a much lower time frame. Let's see if we can identify a setup around that area to use to guide our trading activity for today. So if we scale down to a much lower time frame, like the 1 hour time frame, before we go down into the 1 hour time frame, let's look at the 4 hours time frame first of all to see if we can identify something around here before we move on. So this is the 4 hours time frame, sorry. And as you can see here, since last week's trading session, we have been witnessing buy pressure around the 12,200. So now, talking about the importance of the 12,200, which I made mention of on the 1 hour time frame. So if you zoom out and look at what is happening on the 4 hours time frame, you will see how important the 12,200 level is. Remember, the 12,200 is our TP target yesterday, as I told you that we want to see how price action will be reacting to the 12,200 level to decide if we are going to be adding more sell position here, or probably get ready for another wave of bullish momentum. Now look at the structure here. During the later part of last month, we saw this level was holding selling pressure at one point before a breakout of the structure happened at the beginning of this month. And since the breakout of the 12,200 level here, you will see that price action has continued to trade above that level. We saw a retest of the structure here during the second week, that was last week. We saw another buy pressure coming in from that same area last week trading session. And what we have seen here on the last day of last week trading session, we saw another buy pressure here. And in the last 1 hour now, we have been witnessing another buy pressure around that area. So will the buy pressure around this area continue, or we might likely see a breakdown of this level? So At this point in time, we are at a strong demand zone right now, a level which has been a strong buying niche since the beginning of this month. Now, you would agree that if we are going to be thinking of selling the US tech at this point, we'll definitely need to see price action break down to 12,200 level, and if possible, selling pressure below the structure on our lower time frame to give us further confirmation to add more position to our existing trade. So with the information we have gathered here, it's very obvious that to sell right now or to add more sell position to our existing trade, we need a breakdown of the 12,200. Now, if we scale down to the 1 hour time frame here, this is what you can see here. So I will zoom out to what has been happening here since the beginning of this week. And as you can see, this is the 12,200 level here, where the TP target was hit yesterday. And following this impulsive move that started during the early hours of today, we need to be very patient at this point. Remember, we are at a significant confluence right now. We are within a demand zone, and we are looking forward to a possible breakdown of the structure to give us a sign to join that decline to the downside. And one other thing I would like to lay emphasis on here is this. Look at what happened last week Friday. We saw buy pressure resume around the 12,250 level here, and we saw the breakdown of that level. So for me at this point, it appears that sellers are gradually coming into this market. And one thing I would like us to do here is, if the selling momentum will finally be what is going to play out during the later part of this week, I want to be positioning myself in such a way that I can catch that move early enough, even if possible, even before the breakdown of the 12,200 level here. So how do we take advantage of this opportunity? Well, if we look at this impulsive move to the downside, we might be considering the bullish momentum we see here in the last hour to be a retracement of that previous impulse leg. We are selling pressure around this area, that is the 12,250 level that was tested on Friday last week. Gave us an opportunity to join that sell momentum early enough, and if a further breakdown of the 12,200 level happens, we'll definitely be adding more position to our existing trade. So let's see if we are truly going to be seeing an opportunity to join that sell position at this point. And in order to do this, we will have to scale down to a much more lower time frame, like the 15 minutes time frame. Now, scaling down into the 15 minutes time frame, this is what we can see here on the 15 minutes time frame. And most importantly, we are going to be taking into consideration this impulsive move to the downside. And to do that, we will be bringing out our Fibonacci retracement tool, run it through the previous impulse leg here, and obviously we shall be aiming at an area within our golden zone area as a sell window. And our golden zone area is an area between the 50 and the 78.6% of that previous impulse leg. So this is what we have here, and we'll call it a sell window for the sake of clarity. So I will just place this right inside the box here, and then I'll give the box a yellow color so that we can see things very clearly. So we no longer need the Fibonacci retracement tool anymore, so we just delete it as long as we have identified the sell window now. So we already have a sell window sitting right within the 12,300 level and the $12,250 area. So now, what do we want to be looking out for to join this decline to the downside? Well, I want to see price action give us a reversal pattern here. It could be a double top structure, something like this. Breakdown retest on our lower time frame, then we could join that decline to the downside. In fact, it could also be a head and shoulder pattern, something like the left shoulder, the head, the right shoulder, breakdown retest of the neckline, confirmation to join another decline to the downside, and a further breakdown of the 12,200 level will be giving us an opportunity to add more position. So we need to be very, very patient at this point, and let's wait out to see how price action will play out within the 12,250 and the 12,300 level in the next couple of hours. Now, in addition to the sell window here, and taking into consideration what has been happening here since the beginning of the week, if we bring out our line chart, connect the series of lower highs here, this is what you will be seeing at this point. So I think I have a couple of trend lines here. If we take this, hold on a second, you'll see what I'm talking about now. And we take this 1 2 as well. So we have a couple of trend lines. So I'll be using the first one as my major one and the second one as a temporary one. So the second one will be a lighter one here. So if we bring back our candle chart here, so we can see we have something like this. So we have a zone to look out for selling opportunities. So if price action, you can see the trend line falls exactly within that sell window area. So we continue to remain patient at this point. Look out for selling opportunity around that area. Then we could actually join a sell momentum from that area at the site of a reversal pattern. However, if price action breaks out of the structure, that is break out of the trend line, and if possible breaks above the 12,320 level, coming back into the channel where price has been in the beginning of the week, well, we might be looking out for buying opportunity at the retest of that trend line to incite another wave of bullish momentum. But I doubt that could happen at this point. But if it does happen, we want to be positioning ourselves in such a way that we catch that move when it finally happens. So these are my views here on the US tech. It's unfortunate that I cannot get feedbacks regarding what I've just been explaining so far. So that is why I'm trying to take my time to ensure that this is well understood. And to make things easier too as well, we've identified structures that we can use to guide our trading activities during the New York session. And to further make things simpler, you can munch my screen so that you can use it as a reference point when you're about to make your individual decision for today. So that is that on the US tech. So I will be moving on to the next pair right now, and the next pair that I will be treating is the USDJPY. And on the USDJPY, we had a bullish bias since yesterday. Remember, after we identified a situation where price was a little bit choppy at the beginning of the week, as we saw consolidation phase between the 134.500 level and the 134.150 area. In fact, let's approximate it to 134.00 area. And we saw buying pressure resume around the 134.150 level, and I told you that if we do see a breakout retest of the 134.150 because of the buy pressure we have been witnessing here since last week Friday, we might be in for a bullish momentum at this point. And this is exactly what happened yesterday. We saw the breakout of that demand zone at the 134.00 level. Price action even gave us opportunities to add more position, or probably if you had missed out on this one, then you had a privilege of joining, as we had a couple of rejection of the 134.150, which lasted about 3 hours before the bullish momentum opened here. And remember, we had the 134.500 level identified during the live session yesterday, where we said a breakout of that level will definitely be giving us an opportunity to add more position to the existing trade here. And in fact, what we have seen here in the last 3 to 4 hours, price action broke out of the 134.500 level, retest the structure a couple of times, and it appears price will continue to go to the upside. And if you had been part of this trade, if you had joined this trade from this 134.150, well done to you guys for being on standby to catch that move. And the next thing we want to be doing right now is to move our stop loss to secure the current position we are in right now. And in order to secure this current position, I will be suggesting that we need to give price action some room to breathe here. And in that regard, somewhere right below the 134.300 level should be most appropriate to place our stop loss at this point. And let's wait out and see how far this bullish momentum will go. And one thing we have noticed here in the last couple of hours is that price action appeared to be rejecting this 134.800 level. So at this point, I will not be advising us to add more position, but wait out and see if the bullish momentum will continue to the upside. And if this leads into the breakout of the 135.00 level, then definitely we will be thinking of adding more position to our existing buy position here. Now, talking about the 135.00 level, and to let you know how important this structure has been, One thing you will want to know here is that the 135.00 level has been the highest point price has ever been this year, as we saw price test the structure during the last week's trading session before we saw the sell momentum resume around this area. Now, in order to have a better perspective into the importance of this, I would like us to scale up into the daily time frame. And to scale up into the daily time frame here, let me zoom into the daily time frame. So this is the daily time frame here, and for the sake of those who are not part of the live session yesterday, let's quickly run through this current structure here. So what I did first was to refresh our memories on the USDJPY and acknowledging the fact that price action has been bullish here in the last couple of years, and to further emphasize that, we identify this bullish range here, which has been respected since 2020, October 2020 here. And now things became quite interesting in the month of April last year. So we saw that as soon as price got into the 127.00 level, we saw the breakout of that structure. We saw selling pressure around this area, giving us a situation where price was caught within a channel. And this led to the breakout of the 131.00 level, retest of structure, and we saw this bullish move that took price to the highest point price ever got in the month throughout the course of last year, at the 151.950 level. And during the month of October, we saw selling pressure resume around that area, crashing price back into that same channel where price action was prior to the bullish momentum we witnessed last year. And at the beginning of, I think a couple of weeks ago, we didn't trade the USDJPY for like 2 weeks. As I told you, we wanted to see this consolidation phase mature into a structure which we can actually use to identify trading opportunity. And lucky enough, we were able to see a reversal pattern here after taking into consideration the impulsive move that crashed into the structure. So we saw the first touch of the 127 level here. We saw the second touch here. Price was unable to break the previous low, and lo and behold, we had a beautiful structure that looks more like a double bottom structure. And you know, whenever we identify a reversal pattern like this, the next thing we want to be doing is to identify the neckline of that reversal pattern, which coincidentally fell within the 131.00 level. And if we zoom out, you will see how important the 131.00 level has been here in the last 8 to 10 months. And with the formation of this reversal pattern here, we were looking out for a breakout retest of the 131.00 level to give us a confirmed reversal pattern. And we were lucky enough to be part of this position as price action broke out of the neckline area at the 131.00 level, retest the structure a couple of times a couple of weeks ago, and we were able to join this bullish momentum last week, which gave us over 800 pips as we had multiple entries on this market. Now, with the current structure you can see here on your screen right now, you would agree with me that price action is at a critical point in this market. And you saw as soon as price hit our TP target last week at the 135.00 level, we started seeing selling pressure resume around that area. And talking about selling pressure around the 135.00 level, if we zoom into the past year and go to as far back as the month of December last year, we can see how the 135.00 level had initially started the month of December with a bullish note, as we saw buy pressure resume around that area. But later on in the month, I think during the mid-month of December, we saw the breakdown of that 135.00 level with an engulfing bearish candle to further emphasize the strength of the sellers at this point. We saw a couple of retests of structure, and we saw selling pressure again from that level. And in the last 3 to 4 days now, we have been witnessing selling pressure again around that area to further emphasize that sellers might likely take over this market from this area to incite a bearish momentum, probably back into the 131.00 level before another wave of bullish momentum will happen. Now, to further emphasize the importance of this confluence here is this bearish trend line that started in the month of October last year. So this trend line was a trend line that resisted selling pressure, that supported selling pressure here. As we saw the first touch, we saw a rich test of structure, giving us that bearish trend line. And what you can see right now is the trend line also shows a beautiful confluence with the 135.00 area. So what this simply means is that looking at it from a long-term perspective here, considering the selling pressure we have been witnessing in this market, there is a likelihood that if selling pressure resumes below the 135.00 level on our lower time frame, we will have no choice but to look out for selling opportunities to the downside. And how far that selling momentum will go is what we don't know yet, but I know market structure will be giving us a clue into how that will play out as if we see sudden pressure below the 135.00 area. Now, another thing that will happen around the 135.00 area is if we consider what has been happening here in the last couple of weeks, a breakout retest of the 131.00 level, coupled with the fact that the 131.00 level has been a strong buying niche in the past here, the bullish momentum here could lead into a situation where price will break out of the 135.00 area. And in fact, if price breaks out of the 135.00 area, an area which also shares a confluence with a bearish trend line, it will be a beautiful signal that the trend line may no longer have the capacity to continue to hold selling pressure. And if this happens, it will be an opportunity for us to add more position to our current buy position in this market. And if a further retest of structure happens with buy pressure on our lower time frame above this level, we shall definitely be adding more position to our existing trade. So now with the situation we have here on the USDJPY, you would agree that we are at a critical point in this market. So what we want to be doing right now is to scale down to the lower time frame. Let's see how participants in this market has been reacting to this current structure since the beginning of the week to decide if we are going to be buying or selling the USDJPY. Now, if we scale down to our lower time frame here, and that is the 1 hour time frame, hold on a second, this is the 1 hour time frame here. Remember, we identified the channel at the beginning of the week where we said price action has been finding some bullish momentum around the 134.00 area, which resulted into the breakout of the 134.500 level during the early hours of today. So if this momentum continues to the upside, remember this is the 135.00 level we identified on the daily time frame, which we said is the very strong selling niche in this market. So let's see if this structure here will be broken to the upside, and if it does break out to the upside, definitely we want to be looking out for buying opportunity at this point. Now, another thing that could happen here is buyers may no longer have the strength of the momentum to even come as far as getting into the 135.00 level. Now, what are we going to be looking out for to see that before time that buyers might not likely have that strength to continue from the structure? Well, if we look at what has been happening here since the beginning of the week, we can see price has been finding higher lows, and the next thing I will be doing with this kind of structure is to identify a trend line using the higher lows from the structure. And if we bring out our line chart here, you can see connecting the series of lower highs, we have a simple setup here that we can use to guide trading activity. So this bullish trend line here will serve as a guide, and it can guide our bullish momentum and at the same time can guide our sell possibilities on this market. So if we bring back our candle chart and readjust the trend line, we have something like this. So how does this trend line continue to guide bullish momentum for us? Well, if price action remains above this bullish trend line, we'll definitely be comfortable in our buy position. So what we want to be seeing is price continue to trade above this level. We continue to see buy pressure above the structure, then we are comfortable in our buy position, and the further breakout of the 135.00 level, like I said earlier, will be an opportunity for us to add more position. Now look at what has been happening in the last 3 to 4 hours here. We have been seeing some selling pressure around the 134.700 level here. So I would like to identify that structure, as we might likely be seeing an opportunity to add one more position here if we cite a breakout retest of this level. So permit me to do this here. So I will be labeling this area for the sake of clarity. So we have the 134.700 level, and place this at the top right hand side of my screen. I'll give this okay. So we have something like this. So since we have been witnessing selling pressure around this area, we want to see a breakout of that level. So once we cite a breakout, scale down to your lower time frame, buy pressure above this area. Then if we cite buy pressure above this level, then it's a beautiful sign that price action has taken out all the sell positions here, giving us some liquidity for bullish momentum here. Then we could join that rally to the upside with the hopes that price will break out this level and we had more position. Now, talking about the sell momentum I'm talking about here, the bullish trend line here, if it so happens that price action breaks down the bullish trend line, that the selling pressure here continues in such a way that it gathers enough momentum to break down the 134.500 level, which also shares a confluence with the bullish trend line, this might likely be a beautiful signal that the buyers might no longer have the capacity to continue from this level, and selling pressure below the 134.500 level would be a beautiful opportunity to add more position to our sell trade here. So it's a simple confluence we have here. Let's continue to guide this bullish momentum. And for those who are still in the buy position, we entered here at the 134.150 level yesterday. Move your stop loss accordingly. I have advised you to move your stop loss to somewhere right around the 134.300 level, where we continue to look out for more opportunities to join this bullish momentum. And if it so happens that price action breaks down the structure, then definitely this will be a lower high for us, as price action was unable to break this previous high, and that will be a good sign for us to join a decline to the downside. So these are my views here on the USDJPY, and I hope I made myself clear at this point. Now moving on, now we are going to be looking at the last pair for today, because I'm already out of time right now. I have less than 2 minutes to go, and we shall be taking the pair that 283 introduced to us yesterday, and that is GBPJPY. And we indeed need to thank 283 for giving us this pair to trade for this week, as if you have taken advantage of this opportunity here, you will definitely be in a huge profit at this point. The first position is running with about 120 pips, and the second position is running with about 90 pips in profit, with a total of over 200 pips in profit. Now, what did we see here during the live session yesterday that made us take advantage of this trading opportunity? Well, I would like to scale up into the 4 hours time frame, as that was where we identified this triangle that gave us this consolidation phase that we saw here. So on the daily time frame, this is what we saw on the, let me start up from the daily time frame, then I will break it down to how we got into this current position. So on the daily time frame, this is what we saw here. In the last 4 months, price has been bearish, but the fact that we have been seeing multiple rejection around the 156.00 level was a beautiful sign that buyers might likely be coming in. And in fact, you can see the lowest point price was in the last 12 months thereabout is around the 152.00 level, and in the last couple of months price is yet to break down that structure, giving us a clue that buying momentum is gradually coming in. And when we zoom into what has been happening here since the month of December, we saw after this bearish impulsive move that brought price into this demand zone, we have seen a situation here that looks more like a reversal pattern. And you know, whenever we identify a reversal pattern like this, the next thing we want to be doing is to identify a neckline, which we shall definitely be using to guide trading activity. And lucky enough for us, we had a neckline situated at around the 162.00 level, and this was what we said we shall be using to guide trading activity. So we were looking forward to a breakout of that neckline to give us a confirmation that this reversal pattern is now mature. And in fact, this market structure we have here has a tendency of giving us a huge momentum. And in fact, I will be advising that we have a long-term perspective of a TP target sitting around the 165 level, which shares a confluence with that bearish trend line that has been guiding selling momentum here in the last 4 months. So what I'll be doing now is we scale down to a much lower time frame, as we wanted to anticipate the breakout of that structure. So what we did is to scale down to the lower time frame, and we looked at the 4 hours time frame, and this is what we saw on the 4 hours time frame. So we saw a triangle here which looks like a pennant, where price action was caught within a channel here since the beginning of this month. So we saw the situation here. We had a triangle here, and one thing I stated during the live session yesterday is that whenever we have such a channel like that, what we are going to be looking forward to is either a breakdown of that channel to give us an opportunity to sell, or a breakout of that channel to give us an opportunity to buy. And this is exactly what we saw here. Price action broke out of the structure around this area to give us a signal that we are going bullish on this one. And when I woke up this morning and looked at my chart that is on the 1 hour time frame, this is what I was able to identify here. I saw a situation where price was caught within a channel within the 161.500 level after breaking out of that trend line we identified on the 4 hours time frame. And I said, beautiful, if this bullish momentum continues here, I want to be buying above the 161.500, as this is a breakout retest of that trend line. And lo and behold, this is what happened. And I also identified a structure here at the 161.850 to add more position to my existing trade. And boom, after the S&P global publication, that is the CIPS, which came in with a whooping 53.4, a positive variance of 4.4, it was a good signal for the pound sterling to rise to the upside. And this is what we have seen here, a whooping 200 pips since the beginning of today. And if you have been part of this trade, well done to you guys for being on standby to catch this move. Now the next thing we want to be doing right now, if you are still in this trade, that is for those who are still running in this trade right now, I will be advising you to move your stop loss accordingly to secure this current position. And you might want to be putting your stop loss somewhere within the 162.400 and the 162.200 area to secure this current position as we continue to monitor price action. And I am of the opinion that price action still has a room of continuing to the upside. And one more thing I would like to state here is that please remember that the 162.00 level is the neckline of the reversal pattern we identified on the daily time frame, and there is a likelihood that price action has a tendency of dropping back into the trend line to retest that structure to incite another wave of bullish momentum. So if price action drops, we don't need to panic, as we still have a structure around the 162.00 level where we might likely see price drop into, resume with buy pressure around this area to begin the second wave of that bullish momentum. And in order to make our trading easy for us during the New York session today, I have identified a trend line here. As you can see here, since Thursday of last week's trading session, we have been seeing bullish momentum gradually coming in this market. And when we connect the series of higher lows here, what we can see here is that bullish trend line after connecting that series here. So this bullish trend line will continue to be our guide for more bullish opportunity in this market. So I will be extending this further into the future. And as you can see, it also shares a confluence with the 162.00 level. So let's see how price action plays out from this level. And if it so happens that price action does not drop to the downside here, that is, price does not drop to the downside, instead it continues to find higher highs, well, I would want us to look at what is happening here. Can we identify a trend continuation pattern around this area at the 162.800 level to join that trend continuation to the upside? So let's scale down to the 15 minutes time frame to see what is really going on here. So we do have a structure here already. So we have one around the 162.900 level, a strong psychological level that is. So we shall be identifying that level, and let us label it for the sake of clarity. So we have the 162.900 level there figured out at that point. Then we have a support level also sitting around this area, which, let me use my line chart here to figure things out. Okay, we really don't have a mature one yet, so I will suggest that let's give some room. So let's give some room here. So we have the 162.600. So let's figure that out and place it at the bottom right hand side of the screen. So we should be expecting a potential consolidation phase around this area if the case may be, and if that happens, that is, price action consolidates within this area, then if a breakdown happens, then we might likely be seeing price dropping back into that structure we said earlier that will be giving us an opportunity to join another wave of bullish momentum. However, if that does not the case and instead price action breaks out of the 162.900 level, then the structure here will have transposed into a trend continuation pattern, and we could actually join a bullish momentum from above the 162.900 level. So let's be on standby for any of these opportunities as we continue to monitor price action. And it's on this note I will be calling it a day during the live session today. And before I do, and for the sake of those who are not part of the beginning of the live session, let's quickly run through what we talked about today before I call it a day here. It's so unfortunate that I can read through the comment section to see if there are any questions for me, but it's okay. I will sort things out before tomorrow. So the first commodity we talked about today is the US oil, and in fact we already have the bullish momentum running here as price action is currently, we are already running with about how many pips in profit right now? About 75 pips in profit, and let's hope that price action will continue to the upside. And remember, we have a key structure here at the $78 level, where I said a breakout of this level will be a massive opportunity for us to join another position here. And if a breakout of the $78 level happens, it's very likely that we might be seeing an increase in momentum going forward. So my advice is that we be on standby to catch that move. Then another thing I made mention here is the $77.40 level, which has been a strong selling niche at least in the last 3 to 4 days now. And one thing I said here is, if price action tests the structure, ensure you have moved your stop loss to secure this current position. And I hope you have done that already. Move your stop loss accordingly, secure this current position as we wait out and see how price action will be reacting to the $77.40 level. And I told you that if price action breaks out of that structure, you want to be scaling down to your lower time frame, like your 5, 10 or 15 minutes time frame, to look out for what is happening around this area. So we already have a breakout of the structure, and one thing I want us to be looking forward to is to see buy pressure above this level, that is rejection of this level. Then we want to be adding more position to our existing trade on the US oil. So I wish you best of luck on this one as we continue to monitor price action. And mind you, I told you that for sellers' expectations on this one is a no for me unless price action breaks down the $76.35 level. If a $76.35 level is not broken, I'm not looking for any selling opportunity at this point, as this area here has given us a sign that buyers are still very strong in this market around this area, though they are yet to break out of the structure. But the accumulation of buy pressure around this area is a good sign that we might likely be seeing a bullish momentum during the later part of this week. Now moving on here, we talked about the US tech. I would like to take some water here, don't mind me. So on the US tech here, we have been on a profitable position yesterday as we were able to scoop about 125 pips in profit on this one, as we were able to join the breakdown of that channel. Remember, we identified this channel here at the beginning of the week where a breakout or breakdown will be triggering our position, and in fact we saw the breakdown of the structure. TP target at the 12,200, and we had over 100 pips in profit on that one. And going into the New York session today, despite the fact that price is currently on a strong demand zone, the fact that price action broke down the structure here during the early hours of today was a beautiful sign that sellers might likely be taking over this market from this point. And in as much I told you that I'm looking forward to adding more position as soon as price break down the 12,200 level to the downside, I said we could also anticipate the sell momentum and join as early as possible if we can identify a reversal pattern around this area. And coupled with that, also we have a bearish trend line here, which we were able to identify after connecting the series of lower heights. So we have two structures here that will be guiding trading activity for today. And with the situation we have here, I told you that I'm looking forward to selling opportunities for today. So we are going to be using the bearish trend line here, the sell window here, and the $12,200 breakdown of the structure here for selling opportunities. And in order to use the sell window and the bearish trend line here, I told you how we want to be using the 15 minutes time frame to decide this one. And you can see now we have been seeing some selling pressure around the sell window here. If you are joined, well, it's okay, no problem, but I'm still thinking that we could still see price action come back into the structure, and if it does come back, then we could be joining a sell momentum around that area. Now, looking at what has happened here in the last 30 minutes, I can see that there is something around here. I can't see it on my line chart, but if I look at my candle chart here, I can see something around the 12,250 level here, which is it 250? I think 250 is too high. I think 12,240. Yes, I saw something here which tells me that I can be selling right below that level. So 12,240 is identified here, and we continue to look out for selling continuation around this area. So if you can afford to have your stop loss somewhere around the 12,300 level, above that 12,300, you could sell from that area. But if that does not, if you don't have that privilege of having a sell stop that wide, then you might want to wait for price to come within this level before that bearish momentum happens. And if you cannot join here, then let us wait for a breakdown of the 12,200 level to join that position at that point. So that is my view here. And one thing I said here for bullish momentum is this: for me to buy here, I want to see price action take me out here, break out of the bearish trend line to give us a signal that the trend line no longer have the capacity to continue to hold selling pressure here. So if a breakout happens, that will be a beautiful signal for us to join. Then we look out for buy pressure around the zone, then we can actually join that bullish momentum if that is going to be the case. Then we went on to talk about the USDJPY for today, which is a profitable, we are in a profitable position currently, as we were able to join above the 134.150 level after identifying buy pressure around the zone. And as a result of this, we saw the breakout retest of the structure, which triggered the first position, and we said a breakout of the 134.500 level also triggered the second position. And talking about added more position to the USDJPY, we have identified a structure at the 134.700 level, which has been a selling niche in the last 4 to 5 hours. As you can see here, we have been seeing selling pressure from that area, and there is a likelihood that sellers, if the sell pressure here continues, it might likely lead into the breakdown of this bullish trend line that we identified here to incite another wave of bearish momentum. So we have moved our stop loss accordingly here to secure the current buy position as we wait out to see a breakout retest of the 134.700 to add more position to our existing trade. And if a further breakout of the 135.00 level happens, we shall definitely be thinking of adding another position there. In as much as we're looking out for buying opportunity here, I have told you that we should not ignore the possibilities of selling momentum here. And as a result of this, we have this bullish trend line here figured out, and we shall be using this as a yardstick for trading opportunity. And if price action continue to remain above the bullish trend line and the 134.500 level, we will be comfortable in the current buy position. However, If a breakdown of the structure happens, it's a signal that this trend line may no longer have the capacity to hold bullish momentum. And if this so happens that price action finds sudden pressure below this level, then we shall be looking forward to sell the USDJPY. Then I went on to close the week with the GBPJPY, which was introduced to us by 283. I don't know your name. I'm sorry, I'm calling you in numbers. That is your user ID. He gave us this trade to analyze on Monday, and thank goodness this trade has given us over 200 pips in profit just in 2 hours. And for those who have been part of this trade, I have told you to move your stop loss to secure this current position, as we were able to identify a simple channel on the 15 minutes time frame. So we had a structure here between the 162.900 and the 162.600 area, and price action appears to be tending towards the resistance point of this channel, where we said a breakout retest of the structure will be giving us an opportunity to buy. And if it so happens that price action drops below the 162.600 level, then I told you that we shall be looking out for selling opportunities here to join a decline to the downside, which I said price is likely going to be coming back into the neckline of that reversal pattern we identified on the daily time frame at the 162.00 level in anticipation of a trend continuation. And talking about the neckline, let me quickly show you what I mean here on the 4 hours time frame. This is the neckline of the reversal pattern we identified here, and we saw the breakout of the neckline happen, and this is the first time price action will break out of that structure in the last 3 to 4 months, which is a good signal that buyers are going to be very, very strong in this market. So let's be on standby to be part of this trade as we continue to monitor price action. So it's on this note I want to be wishing you best of luck during the New York session today. It has been a wonderful moment with you guys today, and so far this week we have been profitable on the pairs that we have been monitoring so far. And for the it's unfortunate I can't see your comments, I can see feedbacks in this regard, but I promise you by tomorrow I will get things sorted out, and we shall be communicating and be on the same page to get out throughout tomorrow. So on this note, I wish you best of luck during the New York session today, and I hope you have munched my screen so that you can use it as a reference point when you're about to make your individual decisions on the pairs that we have monitored. And for those who are joining us for the first time, or those who are new with us, please be patient. With time you get to understand how this works, and you will be able to use the information you have here to make an independent decision when you're about to take a position on this pair. So thank you very much once again. I really appreciate you, and I look forward to seeing you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review all the markets we have been monitoring since the beginning of the week, and at the same time get ready to prepare for the New York session tomorrow. Do have a wonderful evening. Bye bye.